Hi guys, and welcome back to CashBright, your guide to investing in an ever-increasingly uncertain financial world. So, Salesforce's stock has risen around 120% since the middle of March 2020, and around 30% from the 24th to the 26th of August. So, what is behind such a rise in the price of this stock? A rise that comes amid some of the toughest economic circumstances in living memory. And perhaps more importantly, is now the time to buy this stock? Well, to answer these questions, we must first consider the nature of Salesforce's business and how they have managed to adjust and indeed thrive since lockdown in March. Salesforce is an American cloud-based software company that provides a customer relationship management platform to companies. The platform enables businesses to improve the efficiency and efficacy of their operations, including sales, marketing, and IT. The company's cloud-based solutions unexpectedly turned out to be just what businesses were looking for once the pandemic struck, and millions of office workers were forced to work from home. But all of this is apparent in retrospect, and things were much less clear when the company's stock price tumbled around the middle of March. In fact, the sudden lockdown of the global economy was effectively a really big cold splash of water for Salesforce, as the company initially saw corporate spending on its products drop. The company therefore had to reimagine its own relevance to its customers, thus prompting them to roll out Work.com, a platform which helps customers to safely reopen workplaces and for their employees to work remotely. The platform has been so successful that it is even being utilised by government bodies and schools to do contact tracing and to ensure the effective management of employee shifts. By reacting so well and seizing the opportunity presented by the new working environment, companies briskly adopted Salesforce's products and earnings surged during the second quarter of the year. On the 25th of August, the company announced its earnings report, which exceeded most people's expectations, thus sending the stock price soaring into the stratosphere. Revenue was up 29% to $5.15 billion, and all of that with adjusted earnings per share of $1.44. Now that is quite an improvement on many analysts' expectations, who originally predicted around 67 cents per share and $4.9 billion in revenue. So the outlook for this company is pretty good in my opinion. And it's a good bet that more companies will be looking for cloud-based solutions for their workforce in future, and Salesforce is quite well positioned to meet this demand during the second half of the year and through 2021. So what about the stock, and is it the right time to buy? Well, the stock is currently trading above $270 per share, and this is up from around $200 at the middle of August. The positive earnings will explain much of the jump, as the company is clearly doing better. But the price is flirting with being overvalued, even in light of the uptick in earnings per share. However, as we all know, the stock market does not function purely on the basis of a company's financials, however much we wish it did. The future trading potential of the company is a big factor here, as many analysts expect the company to go from strength to strength. This is supported by an increase in trading activity among software stocks in general, where we've seen Adobe stock go up 8% and Workday stock has risen 10%. Critically, market sentiment is with Salesforce, as they are not only a key player in this sector, but also a leading light as businesses transition towards a new working normal. Investors are definitely bullish about this stock, and whilst of course there will at least be some volatility in its price in the near future, I think the stock price will continue to head north through the rest of this year. Overall, I therefore believe that this stock is indeed a buy, although I would give a little more time before buying to see if the price will drop off slightly as short-term traders inevitably cash in their positions. Do you agree? Or would you hold off buying this stock given the unprecedented jump in its price? Feel free to discuss in the comments below. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.